with our host, Alan Porter. Alan, I'm ready for this topic today as we have some interesting topics leading into the new year, right?
Absolutely.
All right. So our topic today is the silent wealth grab, how new fair share taxes, reporting rules, and digital trails are quietly redefining rich. So, Alan, when people hear wealth grab, they think new taxes. But what's really changing right now?
Taxes are just the headline. The real shift is the visibility. Governments are expanding reporting data, sharing, and compliance rules so they can see wealth earlier and more clearly than ever before. Once wealth is visible, taxing is easy. It isn't about raising taxes first. It's about building the tracking system. And with AI expanding into everything, it's digitally tracked.
It's not going to be easy to move money or anything. You have to be really smart about it.
Absolutely.
Yeah, it's not, especially, I guess, when we're filing our taxes, AI will be smelling if it's a rat versus having a human who didn't care about looking at our taxes. Yeah. So how are high earners being tracked today that weren't tracked 10 years ago?
Digital payments, third-party reporting, beneficial ownership registries, international banking cooperation, and expanded IRS data matching. Every routine transaction now creates a permanent digital record. 10 years ago, complexity protected privacy. Today, complexity flags attention. You never remember when Trump came into office and developed the Department of Government Efficiency? They found a mine. M-I-N-E, like a coal mine, that had documents for federal workers in boxes. And now all that's being changed into digital records that can be accessed within seconds.
Why is playing by the rules becoming more expensive for wealthy families?
Because compliance now itself has a cost. More reporting means more accountants, more attorneys, more audits, and more exposure. Even when nothing is wrong, the process is time-consuming and costly. Wealth isn't just taxed, it's managed under scrutiny. Remember, the government taxes what you own, not what you control.
A lot of times the tax strategies that you provide, Alan, sometimes people have to ask questions, but because of your team of professionals, you make sure that those red flags won't come up.
Absolutely. In fact, we've got one tax strategy right now that this attorney is suing them in Los Angeles, and they have won that one because they know the tax codes.
100%. What mistake are high net worth individuals making right now?
We're waiting for one thing. Most people plan their taxes after the law is passed. You can't do that. By then, options disappear. The wealthy don't react. They position early. Before reported transactions, valuation changes, or liquidity assets lock them in. They are proactive in their planning. I ask my clients, especially the affluent clients, when is the last time any of your advisors give you any proactive advice on saving taxes? It's slim to never. And I just talked with 3 doctors and 1 successful businessman this month that their financial planner and CPA, nothing. They don't give them any proactive advice. It's all reactive. So the other question I have for them, I tell them, I say, it's not a question, it's just a statement. You may have the greatest advisors in the world, but it's what they don't know that's going to end up costing you hundreds of thousands, if not millions of dollars, in undue taxes, fees, and lost opportunity costs. And they all agree with me, but they say, Alan, what do you mean by lost opportunity costs? I said, what if I could show you a tax strategy that's going to save you enough in taxes to buy your retirement plan that's completely tax-free, and it eliminates or mitigates all the retirement and stock portfolio only compounds and creates a legacy for your family. On a tax strategy I did with taxes you would have paid, but now it's paying you instead. They all say, Alan, that's great, but how do you do it? I said, it's not how I do it. It's who I know that knows how to do it. And they're part of my team.
What does smart wealth strategy look like in this new environment?
Less accumulation, more structure, more control over timing, taxation, and especially visibility. The question is no longer how much can I make, but how much do I control after the system sees it? Remember, the government taxes you on what they can see, but they don't tax you on what you control. Also, how much do you have in taxes after much of those assets are protected from the risk in retirement? How much do you have in income after taxes? That's the big question for yourself.
100%. That's the most important thing. What are you paying in taxes and what are you keeping? And what do you have? Yeah.
I'm doing many strategies right now. One of the clients I've had, and I think I mentioned this before, but we're getting $2,280,000 back in taxes he's paid over the last 3 years. It's a legal strategy. It's been around for decades.
It's just the other people who aren't going to tell you. So that's why you have to consult a professional like Alan, so that you don't charge for these consultations, do you, Alan?
No. The consultations are free, and if an attorney or something like that's involved, that's the attorney's fees. They're not mine. This is all educational.
And so they have certain places they can contact you, right? They can contact you. Yeah.
910-551-1046. They can go to my website, which has a plethora of information, and you can schedule an appointment with me. In fact, I have a retirement tax calculator on there in the upper left-hand corner that you can go on that calculator and get a ballpark figure of the taxes you'll pay in retirement. But that website is www.strategicwealthstrategies.com, and my email address is strategicwealth0@gmail.com. I look forward to helping everybody because it's all education.
All right. That was the Strategic Wealth Strategies podcast, guys. Take care.